This is such an important talk today because I got to admit we're all a little bit freaked out about the economy. So I'd like to invite Steve so he can get set up here. Sal Guarneri with BMO. BMO's come out with some very interesting statements. Love to welcome Sal up. He's got a couple of decades of experience in macroeconomics. Currently a Senior Economics and Director of BMO. He's really an expert in the housing market and the big rocks, the big picture stuff. So really excited to hear Sal's perspective. Christopher Alexander, our pal Christopher. I had the privilege of working beside and along with Christopher and cheering him on as president of RE/MAX Canada. He's grown up in the business and he knows what's going on out there. He's got his ear on the street, really gonna enjoy his big picture on what's going on in the business. So welcome up, Christopher. Peter Norman with the Altus Group. Really excited to have Peter here. Again, Peter's an expert in the market. The housing market is always being leaned into to report on the housing market. So come on, folks. Christopher, give a warm welcome and a soon goodbye to Christopher, Steve, Peter, and Sal.
So we're going to have a very engaging conversation about so many things this morning. So I thought maybe last night I couldn't sleep. I just came back from a trip and there's a 12 hours time difference. So I thought maybe give Mr. Trump some acronym. P for tension, R for reckless, U for uncertainty, M for madness, and Mr. Trump, P for populism. He's basically a populist and he thinks everything should be America first and made in America. So let's just start, gentlemen. So I start maybe with Sal and then you guys, Peter and Chris, join in. So Trump last night made a comment and he says he's pleased with the conversation with Justin Trudeau about the deal that they have made for 30 days, but that's just the beginning of the discussion. He didn't basically end it. What do you think, guys? Trump is really negotiating a tariff, or he's simply using a tariff as a tactic for the broader picture of an argument between America and China?
I'm glad he's pleased with the progress we've made so far. But yeah, it's really difficult to see exactly what his motivation is. The reasons seem to change almost by the minute. He definitely wants to see a shrinking trade deficit with other countries, if not a balanced trade position with other countries, including Canada. But in particular Mexico and China, the two countries that the U.S. runs the largest trade gap with. He definitely wants a lot more reshoring. When you listen to him, it sounds like he wants the U.S. to build pretty well everything that it consumes, including all the motor vehicles it consumes. And then, of course, he wants the border to be tightened up and wants our help in the fight against the drug trade and illegal migrants. And so there's a lot of different reasons that he's pushing trade protectionism, which makes it very difficult for us to placate and offer the right concessions. Thankfully, we did. Apparently, we did yesterday. At least satisfy most of what he wanted regarding the border. Tightening the border. Whether that will hold 30 days from now or even 3 days from now, no one can be, I think, entirely certain. Come April 1st as well, I think he will be pushing harder for the first couple of reasons, in particular trying to shrink the U.S. trade deficit with other countries. So that's perhaps the most likely date that we could get hit with tariffs. So, yeah, it's going to be a tough 4 years.
Yeah, I think, I'm really loud. Hopefully that's good. I like Sal. I'm glad that we have some temporary relief on this thing. But I think one thing that's kind of important and that we're trying to watch pretty closely right now, everybody in the last few weeks or so have been working through what the economic impact is. That we have this massive downside scenario of a full-on tariff situation that are permanent or at least that are prolonged, and that that situation was something like taking about 4 percentage points out of GDP over the next couple of years. That definitely puts us into a recession, hundreds of thousands of jobs lost, Ontario hit hardest, so on and so forth. I think you've heard those numbers. But I think what's important is that a lot of that has already started to take place, just not so grand, not so big. And one of the things we're watching, for instance, in the industrial sector, I'm aware of several deals that have fallen through where, there were plant expansions or new things on the logistics and manufacturing where now companies are just more cautious. So we're in an era of trade tensions. We haven't headed that off, and that's going to affect investment, and it has already affected investment just from the last couple of months of churn. And that affects communities. And, London, we're doing a bunch of work right now in London and with those guys, and I know a number of transactions have fallen through. Those are plants that are not, there's construction jobs that won't happen, it's ultimately manufacturing jobs that won't happen, and it affects the income in that community, and that's already happened. So, I think whatever forecasts we had going into 2025 before the trade tension stuff started, we're in a different kind of path now, and I think that's a pretty important thing to bear in mind, regardless of what happens in 30 days and whether this all gets solved.
Christopher, you travel across Canada. How do you see the market regarding this tension of the tariff that we have across Canada? How do you see, what's the feedback with the agents or broker owner?
Well, I was really looking forward to some consistency this year. And all the signs were there. We had a lot of positive consumer sentiment coming into 2025. Obviously, rate reductions, economy was doing a little bit better. Unemployment was, looking at that very closely. We had some scary months there, especially in Ontario. It's hard when you have uncertainty. Consumers tend to pull back. We saw that for 2 years when the media was talking about the sky falling in real estate and the Bank of Canada saying, we're cutting rates now, but wait, there's more, which caused a lot of people to hold out. But the good thing is, or the thing to always remember is, we're not in a commodity business, and there are still people that get divorced, they have babies, people die, and they're going to need people to help them buy and sell real estate. And there's a lot of ammunition for first-time home buyers who have been really missing from the market for almost 3 years. That's going to help. But there's no question that this looming trade war, which I really believe in the end will get sorted out before any major damage happens, it causes uncertainty.
I guess the word is uncertainty. So uncertainty usually is a short term. When it's a short term, so there's opportunity. So the whole point with this question is basically take a look at the opportunities that are out there. So interest rates are dropping, but the bond market is not really responding. Perhaps maybe due to the uncertainty, and it's not really dropping as it's supposed to be. Consumers are concerned. The renewal of the mortgages of the COVID era, it's coming to renewal for 2026. Agents and their client, they think the interest rate is going to go up because the tariff caused inflation. What's your take on the interest rate? Do you think the interest rate will go down or will go up? And what would really be the impact of the people that are coming for renewal in 2026? Any of you?
Well, we definitely think interest rates are going down. Even before possibility of a trade war, we thought the Bank of Canada had a couple more rate cuts under its belt, another 50 basis points. In the event we do get hit with tariffs and we most certainly slip into recession, in particular Ontario, we would see the Bank of Canada cutting an additional 100 basis points on top of that, probably taking policy rates below pre-pandemic levels into the ones. If we can avoid tariffs, and I think now the odds are probably about 60% that we will get by scot-free. We still think the Bank of Canada will cut another 50 basis points just because inflation is well behaved in Canada. The economy starting to pick up, but it's not going gangbusters. The unemployment rate is still elevated. So they'll cut rates a couple more times. Unfortunately, for fixed mortgage rates, they've already priced in, bond investors have already priced in a couple more rate cuts from the Bank of Canada. Probably won't see fixed rates come down too much more, maybe a little bit. So we worked out the math based on our forecast. Probably better to go with a variable rate mortgage. And if we do get into trade war and see an extra 100 basis points of rate cuts from the Bank of Canada, that variable rate will pay off even more compared to a 5-year.
Pray for a trade war.
As long as you keep your job.
Well, you know, funny, kidding aside, like it's been a good wake-up call for the country. And we have trade wars, quote unquote, with other provinces in Canada. And I think the government's finally looking at diversification, which should have taken place a decade ago. And there's probably going to be some short-term pain. I still believe, fingers crossed, that we're not going to have this tariff situation. I think there's way too much pressure from, you know, there's 32 states that our provinces are their number one trading partner. And I think those governors have been in the ear of Trump. And what most people don't understand is that it's the end consumer that ends up paying the tariff. The businesses pay the tariff, and they pass those costs on to the consumer. And he campaigned on low inflation. And I think he will understand that it's going to have the adverse effect of what he's hoping to do.
Peter, your point?
I think, I mean, I'll just, dancing back a little bit to the interest rate piece. I mean, I think it's important to realize that we're in the end stages of the interest rate cycle, and a lot of the impacts of the interest rate cycle here in Canada have kind of played out, and we're going to see, I mean, obviously we'll get the rest. So I don't disagree with Sal that we'll probably, under a base case scenario, maybe another 50 basis points till we get to a steady rate environment. But on the bond market and fixed rate mortgages, we saw most of those changes take place a year ago. And Sal said they were pricing it in, that's what it meant. We saw mortgage rates come down almost a percentage point, right, from October of 2023 through to the spring, and then it's been much slower decline since then. We also saw the house price adjustment primarily take place between the middle of 2022 and the middle of 2023. That's when the interest rate cycle had its biggest impact on resale prices as well. I mean, I'm telling you guys, guys know that for sure. But I think that price cycle now is washed out. They bottomed out, and the market is waiting for the right kind of signal to start to get a little bit of price traction back in, and that may happen this spring or as we go into through 2025. Again, with a kind of a more stabilized trade environment. Everything now has to be qualified because we bottomed that price cycle out, because the interest rate cycle has now pretty much played itself out. It's a pretty good situation to be in. Earlier Dave was sort of saying, who's in the camps of like, we're ready to go, or no, let's just wait and see. But I think that it's a good juncture right now to be very optimistic about where things go. It's just that it's going to be a market where you're seeking out great opportunities, more so than just a flush. We don't really want a big flush hot market. I think we want a good opportunistic market, and that's probably what we're going to.
So, government policies. We have a federal election this year and probably a provincial election. So do you think really, could be Mark Carney, could be Paul Weir, do they really can solve the housing supply issue that we have? Everybody, with all due respect to the politician, they make promise, they make announcement. An announcement talks about $1 billion of investment here, there. But by the time they get to implement any of those things, the 4 years term or 5 years term is over and we're back to square one. Do you really think with the population growth, with the immigration policies that we need to have labor force for Canada, do you think really the federal government can help with the housing supply?
Only if all three levels work together. That's the only way. Mm-hmm. And I've been on a tremendous amount of committees and boards over the last 2-3 years. And these are developers, a lot of politicians, approval lawyers and municipalities, and each sector has their own agendas. Federal government has their agenda, the provincial government has theirs, and so do the cities. And unless they all work together and have the same strategy, I think we're going to continue to have the same issues.
Peter?
So agree that there's there is no harmonized agenda, and that's definitely been a decades-long problem with managing the housing file in Canada. I think on the federal government side, and I think what the current government has found over the last number of years as they've been trying to address housing, is that the federal government has very few levers that really make a big impact on some of the key issues of housing supply and management. They have done, I think, a pretty reasonable job. I'll be very careful in a group of realtors to say this because I don't want to get lynched on the way out, but bear me out. I think that they have done a reasonable job, like over the last 20 years, of that turning the tap on, turning the tap off in terms of mortgage rules. Like, we never like it when it happens, but that it's been able to moderate the market. But on the core issues of supply, they have very few levers. You've mentioned $1 billion here and $1 billion there, and I guess the old joke is eventually it adds up to real money, but it doesn't in a housing sector that right now is a $300 billion a year construction market, and you're just throwing in a little bit of money. It's not. None of the housing programs are sufficient. And then I guess the final point, and this goes to all levels. This is actually one area where all levels are on the same page, but it's the wrong page for what we need. And that is that when you talk about housing supply issues at any level, with any level of government, and you look at the policies addressing, it's generally interpreted as bringing forward subsidized housing. What we used to call subsidized housing. Now we call it affordable housing because it sounds better, but subsidized housing of one sort or another, either through government subsidy or through a regulatory subsidy like inclusionary zoning or something like that. And that is bringing housing forward for a certain segment that's seen to be where there's a supply shortage, and there is, and that we would hope that there's going to be policies that address that segment. But it's not only ignoring the overall need for housing supply of affordable housing at various levels to meet the whole market, but it's at the detriment of those other segments. So for instance, whether it's at the municipal level, at the provincial level, these inclusionary zoning policies, it's like, let's engineer bringing forward a subsidized unit, but the subsidy is not going to come from government, it's going to come from the other condos in that building who are going to have to pay more to subsidize that thing. That then has created a crisis in the main market, right? Because you've just layered on more costs on top of many costs. So we have, you guys may be familiar with my report that got a lot of press about a month ago or so, and there's a national one coming out shortly on just the level of government fees and taxes that are in new housing, and also this report does a benchmarking of municipalities across the GTA, and just showing what a variation there is, not just in terms of the level of fees, but how long it takes to approve a house, a new building, which is it's not measured in months now, it's measured in years, the number of years it takes to get the approval. Like, all of those things are contrary to addressing housing supply and doing so effectively.
Well,
Sal, go.
Well, BMO Economics really never fully bought into this story that there was a housing supply crisis in Canada. There was an affordability crisis in Ontario and British Columbia. But, for the most part, we've been building about 250,000 homes per year in recent years, which should have been enough if we had normal population growth during that period.
250,000 homes in Canada?
In Canada, yes, across. And that should have been enough. That's close to record highs for housing starts. But it wasn't, because we were growing our population by more than 3% per year. But that's been resolved now, or will be resolved, because the government is right-sizing population growth to be more sustainable with the infrastructure growth and the housing supply growth. Could take a while, but the aim is to basically flatten out the population, maybe even shrink it a bit for a couple of years. So the supply crisis, I think that'll take care of most of the supply crisis. The problem is we ended up with an affordability crisis in Ontario and BC because population was growing at an unsustainable rate, so demand was unsustainably strong. Builders could not keep up with that demand. And then we had the too easy credit during the pandemic, which inflated prices as well. But those two things now are behind us. We still have a bit of an affordability issue in Ontario and BC, in particular in the Greater Toronto region. Some of that's been resolved by prices coming down, mortgage rates coming down, and they'll probably come down a bit further, especially variable rates. So most of that crisis, I think, is behind us. Now, what can governments do? I agree with Christopher that all three levels of government have to act together to reduce costs fundamentally, developer costs, taxes, and free up make it easier to build homes across this country. And it's not really a problem in many provinces, and that's why affordability is pretty well reasonably good anywhere else beside Ontario and BC. But a lot more can be done to get costs down and to improve affordability in the housing market.
Chris, anything to add?
Well, it's just when you have development fees, and please correct me if I'm inaccurate here, but when your development fees in Ontario, for example, are about 30% of the overall cost of building, it's really hard for a developer to make any money. And I think right now, especially in the condo market in the GTA, you have oversaturation of supply. It's a lot of the same units we were talking about earlier. But there's coming up a point where all the canceled projects and non-housing starts are going to catch up to us, and it looks like it's going to be 2028. Apparently there's only 5,000 units coming on in condos in that year.
For sure it will be demand. I mean, we only sold about 5,000 last year, which as opposed to 30,000 just a few years ago. So the decline in that, you're right, that there's a lag between the time that they'll get started and they'll get completed. But yeah, we'll have we'll have a few years where things are quite low, and how fast it ramps up after that is kind of a question, but I don't think we're ever going to come back to those 30,000 range anymore.
Yes, and all the bureaucrats and different departments for approvals, they all point fingers at each other. I have a good friend in the approvals department in Toronto, and he blames the lawyers and they blame him, and the municipalities blame each other. Like, it's very distorted. And the one thing I've found encouraging, although this has been happening for 18 months now, is there's been a lot more talk about solving the issue. But so far it has just been talk, so we need action.
So I think it's fair to say, even population growth, if the government corrects its immigration policies, but we do have an issue of a labor force of building these homes and condos. Ontario, Ford did a report a few years ago, 150,000 homes we need on an annual basis. Now apparently that report is 180,000 homes. So even if I strongly feel if they even tame the immigration policies, we're going to have an issue of how to build them. And now with the pre-construction, the question with the pre-construction, the segue that we were talking about it, there is no confidence with the investor market, with the developers, in terms of building. Yes, there is oversupply. Condo market is truly in GTA is a bloodbath. Many people are walking away from that. But solid developer are also pausing. What sort of confidence do you think they need from the government in order to be back on building? Because if we wait till 2026 to 2028, we're now shorter in supply, and the demand is going to continue to grow, even if the immigrations go back to the level of the 2021, which was 350,000 people. So what is really need to be done, Peter?
You had a lot of things in there. You had a lot of matters in that one question. But just at the outset of the labor force issue, which is a problem, right? I mean, it's a problem right now in terms of whether we can ramp up supply sufficiently because of it. But I will say, like, I have been watching or involved in analyzing or watching this the construction real estate industry now for close to 35 years. And I can't remember a time that, labor shortages weren't some sort of an issue. It has always been or some segments of labor force anyway. So I think that there's going to be some short-term problems as well on construction labor, particularly with the. Sal made reference to the programming right now, the federal programming right now to reduce the number of non-permanent residents and workers, and I think that's going to hit construction harder than other sectors. So that'll be a rocky period, but we'll solve that. But on the issue about what is needed in order to get projects moving on new construction, particularly in the GTA, which is where, area that we're all concerned about, is it's so kind of multifaceted. But there are definitely cost issues, and we've already touched on that, and governments can immediately make a change on that. We've seen some municipalities now, we've 3 municipalities that have made moves to eliminate or reduce development charges, which is a good start on it, and the province could have a role in terms of trying to reduce some of those costs as well. And so that's a role. But on the flip side of the piece, we may also just be oversupplying the condo market. That's a little bit of an issue. The condo market, the levels of the trajectory we were on in terms of the levels of new supply of condos was kind of artificially put in place by the growth plan. The growth plan now has been eliminated. We haven't gotten sufficient movement on where and how to build more ground-oriented housing, but the demographics are clearly moving towards ground-oriented housing in the GTA, and that's where the biggest supply is. So we still have a shortage of ground-related housing, new housing, and we don't have as much demand for the condominium apartment as we had before. And unfortunately, right now, if you've got current projects that are underway or in the planning stage or even being marketed, you're being caught in the middle there. It's an expense. You put a lot into it. It's an expensive project to build. The price environment now is adjusting because of the interest rate cycle, et cetera. And really the fundamental demand is starting to fall for those types of units.
Well, demographics have changed so much. I mean, we're still lagging. We're at 80% occupancy in our office towers in downtown Toronto, for example. And most countries in the Western world, especially in Europe, have forced people back to the office. And that changes, like when you have a lot of people move to the suburbs and then all of a sudden they have to commute an hour into the city, they might be thinking about changing their living arrangements. And so I think there's still time to sort through a lot of that demographic shift. And we will come back. Like New York was gone through the same thing, but now they're back to almost 95% of occupancy in Manhattan, even with the congestion tax they're charging. But until we start to see our urban centers revitalized again, I think the condo product isn't going to be as desirable as it once was.
Yeah, the problem we've had on the supply side is we're not building the right product. I mean, I take usually the first GO train into downtown Toronto in the morning, so myself and about 100 construction workers get off that train. And what they're doing is they're building condos now still that not a whole lot of people want to buy at this moment. So we actually have an oversupply of condos, and they could easily be building detached homes or other types of products. And again, now that we're downsizing our population growth, we're going to see household formations across this country back in the 200,000 range, much more sustainable. We can build, again, 250,000 homes across the country, and enough homes in this region. We have enough construction workers. I don't believe the temporary workers curbs will hit the construction industry. I think they're largely spared. So that's not the issue. We've got to get the prices down, the cost down of building all types of homes. We've got enough construction workers. It's just that product is out of reach of many people. It's the costs that have to come down.
Sal, back to Trump. Mr. Trump, in his first term, actually by default caused more investment opportunities within Canada. Companies, they moved, particularly the GTA tech sector, because they were looking for talents and the talents that were available here. Do you think of our unemployment now is really sort of lost the momentum, is lagging, is increasing? So do you think with his attitude, Ontario in particular will have that opportunity again to build the confidence within the foreign investors to come back and invest for employment hub of the technology, or American company come here, and then we will see?
Yeah, unfortunately, I think that the greatest harm that the Trump administration will do to Canada is by discouraging investment in Canada. Even if we resolve the trade issues and we avoid tariffs and we negotiate USMCA, I think that uncertainty will overhang investors in Canada and businesses, basically, for the next 4 years. There was a survey by KPMG recently that suggested almost half of Canadian businesses are already planning to move operations, production, or invest more in the US to avoid tariffs and avoid a lot of the uncertainty that goes with the Trump administration. So I think that's the greatest damage. I mean, our investment was already fairly weak in recent years, especially for productivity enhancing purchases of equipment, for example, AI equipment that businesses need. And I think that that sentiment will prevail right for the next few years. I hope it doesn't, but it could mean that our governments will need to work much harder to encourage investment and keep investment in Canada. If they have to match Trump's corporate tax cuts and lighter regulations, they're probably going to have to do that one way or another.
Yeah, we need a total overhaul of our tax structure here for corporations. Alberta's got a very attractive corporate environment. That's why they've seen such immigration to the province. But make no mistake, Trump's mandate is to build America, have businesses, have their plants and factories in America, so American workers have jobs. That's why he went after Mexico at the same time as Canada. However, our falling dollar will probably be an attractive place for investors of all different ilks. I'm hopeful that they might do a tweak to the foreign buyers ban, have some more exemptions there. But the other opportunity I see is it's clear that the current government in Canada's policy has been so poorly received by the mass population. Even if a Liberal leader gets elected, they know they're not going to be able to get in with the current structure. And I think we will see big changes there, which will hopefully lead to more investment from different businesses.
Peter, what's your survey reports with Altus?
Well, I mean, I'll scoot back to the beginning, to sort of the core of your question, which you had, which I think, if I was reading it right, 2016 we saw, and for a number of years we saw this kind of phenomenon where the tech sector we were really the darlings of the tech sector, and we saw a lot of investment. We saw Google come in here, and they built a new building since then, all this kind of stuff, and some of that is to the credit of government policy here. I mean, Ontario continues to be fairly successful at being a leader on autonomous automobiles, for example, and with the work in Waterloo and in Toronto and elsewhere. And there's been some investment going in there, and that's continuing to generate some interest. But I think the core of it during that early Trump era was because there was a lot of nervousness about the investment environment in the US, plus the immigration curbs meant that that this was a better place in order to recruit internationally in terms of talent, not just that we had the talent, but that it was easy to get the talent here when you wanted to recruit it. And I think the tables have been flipped on that this time. I mean, Trump hated the tech sector when he came in before. Now they are his best friends, and they have a very cozy relationship, and they're getting all the, that's where the encouragement is to stay there. So we're not going to see that same playbook play out this time around, I don't think, at all. Maybe even the opposite, as I think Sal has kind of indicated.
So 2025, could be a short-term uncertainty, could be the whole year uncertainty. What do you see as a risk and opportunities for overall Canadian economy and in particular real estate industry?
Well, opportunity is if we do avoid a trade war, our economy should pick up, and that, in particular, Ontario's economy. We could top 2% growth this year, which would be a step up from last year's estimated rate. For one, Ontario households are very interest sensitive. We know that on the way down. When rates were going up, people were cutting back spending. They had to pay more for their mortgages, their other bills. But it works in reverse as well. Now that rates are coming down, they'll have extra money to spend, and they'll be spending it. So Ontario, we believe, will be at the top of the growth charts for Canadian provinces this year. Again, close to 2%. So that's going to help. If the U.S. economy continues to do as well as it has, and it should, unless Trump gets into a trade war with the rest of the world, his other policies are very pro-growth oriented. I mentioned a couple, the tax cuts and deregulations. So the U.S. economy could continue to hum along this year, which will support Ontario's economy in particular. A couple things that may not, will weigh a bit against our economy, though, the slower population growth. Ontario has one of the higher shares of temporary migrants, residents, as a share of the overall population, so they'll take more of the hit in the immigration curbs. And the housing market is still sensitive to, yes, rates have come down, and most people, thankfully, now are refinancing their mortgages at well below their stress-tested levels, but they're still refinancing at higher rates than a few years ago. So there is a bit of a drain on their overall spending. As I mentioned, Ontario's housing market is still, especially across southwestern Ontario and the Greater Toronto region, there's affordability issues, and that constrains people's spending as well. So it'll be a better year this year for Ontario's economy, but it won't be a terrific year.
Peter?
You know, Sal has mentioned population a couple of times, so I thought that I would just take a step back and provide a little bit of context for this, because it is perhaps, and I think Sal was indicating this, it is one of the most important drivers of our sector, of the real estate sector, for sure. In the last 5 years, Ontario has grown by about 350,000 people per year. Now, it peaked out above 500,000 last year, and we're like focused on that. But it's actually, when you take the dip of the pandemic and all the rest of it, 350, and that was about 30% higher than what the traditional population was before that. But we've been gearing towards that slowing down. It's not just the current, liberal policy or whatever that to readjust that has suddenly snuck up on us. The Ontario government projections going forward that date back to this summer and before were that in the next 8 years or so it would be something like 175,000 people per year. So that's still half of what we've seen in recent years. That was just the baseline population projection for Ontario. That means that whatever we're used to from the last 5 years, including the dips and the, on average, that we've already ratcheted it down by almost 50%. And then with the population adjustment policies that came out in October from the federal government, with the declines in the next couple of years and then coming back up. Just last week, StatsCan finally put those numbers into a projection mode, and that's now looking at 100,000 population over the next 8 years on average, with the dip in the next couple of years and going forward. And that's 1/5 of what happened last year. It's 1/3 of our running rate that we've been used to lately. So that's a lot lower housing demand overall. That's a lot, certainly for new homes because that's where the margin is, but that's a pretty significant, those are not marginal changes, those are orders of magnitude change, right?
Christopher, a realtor, risk and opportunity.
So my thoughts this year, in spite of all the headlines in the news recently, I really believe for the good full-time agent, professional agent, it's going to be a good year. I think that the hope of returning and fantasy of returning to 2021, early 22 levels has set in, that it is just fantasy. And that's going to put a lot of pressure on the part-time agent. So what does that mean for an organization that is focused on the full-time professional? I think we're going to be back to a good enough market to keep the focused agent happy. You're going to have to work really hard. Deals are going to continue to be challenging to put together. But I do believe that there is enough pent-up demand from the first-time homebuyer cohort that have been really sidelined for almost 3 years, that it should carry us through. But if you're not dedicated to the business, in touch with your database, doing the activities that are going to generate revenue for you, it'll be a tough year. But if you're doing those things, it'll be successful.
So maybe a question from all three of you as consumers. I'm sure you dealt with realtor, all of you, in part of your life. So what do you think the realtor should do to stand out in this competitive market? What's the number one that the consumers in today's era are expecting from the realtor?
Might want to ask the realtor.
He's asking the consumer.
I think today's consumer, it's all about, most of them, especially the younger generation, it's all experiential. You have such a greater depth of information and insight into what people are actually doing. I'm always so amazed by the social media famous agent that is projecting a level of success that's not real, because people can see that now, especially consumers. But it seems to be all about experiences. People are craving that. You can rate people. Thankfully, we do really, really well on all the agent ranking systems. But they want to make sure that they are working with somebody that is not only doing the basics, but providing a better experience. And those are the people that are going to tell their friends and family, their coworkers, oh, you got to work with this guy or girl because the experience was amazing. It was really stressful. It's still one of the most stressful things that people go through in their lifetimes. And managing through that, making it positive is so important.
I feel like a few years ago, the sort of discussion point was, with the ease of people doing their own search, does that erode the realtor's value too much? And I think the playbook has been, I think the book has been closed on that. I think that's not, we've seen that realtors have retained their value even as search functions start to get broader and broader. And I think a big part of it is the package of knowledge of just guiding people through the process, and doing so absent of the noise around, whether it's misinformation or whatever else. I mean, a young home buyer or even an experienced, move-up buyer, first of all, it's not always, even if you're a move-up buyer, it's not always top of mind to remember how the whole process works and all that kind of stuff. So I think that service package continues to be the main value point for realtors. That's probably important.
Sal?
Yeah, and I think it's important to understand that the consumer backdrop in Canada is getting better, and in Ontario, largely because interest rates are coming down. And the fact that most people still have a job. I mean, yes, the unemployment rate's gone up to, say, 7.5% here in Ontario, but not because people have been laid off for the most part. We've still created 165,000 jobs in Ontario in the past year, 2% increase. Problem is, labor force was growing a third faster than that. So people are, barring a trade war, are in a relatively good position. Inflation is down now. It's actually a bit below the 2% target. Their wages are rising faster than prices are going up, so they're seeing real wage gains. So they're in fundamentally a better position now to spend more, including on homes, especially now that the price of homes have come down. So I think the backdrop for Canadian consumers is much better now, and that's why we generally are cautiously optimistic that the housing market in the Greater Toronto Region will recover, continue to recover this year gradually, because there are still affordability issues and the slower population growth issue. But the trend will be upwards if we avoid a trade war.
Which we will. So you want to stand out in this crowded market. you need to be knowledgeable, and you need to create that journey that lasts in the mind of the client. My last questions. So it's a political question. So election. Are Canadians ready for a bold, decisive move leader such as Pierre Poilievre, that he talks a lot of cutting, cleaning up the mess that Trudeau created, or a knowledgeable, sound-minded individual like Mark Carney? So what's your bet? Who is going to win the elections? Chris?
I think, candidly, I think the Liberal Party has done a tremendous amount of damage to themselves and have been exploited for that, and the current situation the country is in. I mean, proroguing Parliament while they sort out their mess, I think, has really left a sour taste in a lot of people's mouths. But I've also been watching really closely, just there are still a lot of tried and true Liberals that just didn't like Justin Trudeau, and they seem to be on the Carney bandwagon. So I think it'll be closer than we've expected, but it's almost like the Ontario Liberals of 4 or 5 years ago. They got wiped out because of a lot of bad policy.
Peter?
So I'm not answering.
You're not answering. Okay. Peter?
Yeah, I'm not inclined to answer the question in terms of probabilities right now either. And I don't really like to, root for stripes. In my business, they all parties, I suppose. Well, the main two parties anyway have good housing policies and bad housing policies in their platforms. We don't even know what platforms are actually going to percolate up. We've got TikTok videos from one side, and we've got the legacy of the last few years from the other side. But we'll see how who's going to be addressing the housing file kind of better as we get into that campaign, I think. But in terms of who wins, I don't know. There's a lot of momentum right now behind Carney, but there's a big hill to climb, as Chris says.
Sal?
Yeah, I won't touch the political side of that question, but regardless of who wins, either in Ontario or federally, we really need a strong focus on bringing investment back to Canada, especially now. Even if we avoid a trade war, given what Trump is planning in the U.S. to try and get as much investment as possible there, we really have to make a concerted effort to keep investment here and bring it from the rest of the world. We've done a great job, our schools, our companies, in developing AI systems, but we haven't done a great job at actually using AI to increase our productivity. So there has to be more of a focus on that as well. And if governments can help, that's great. But I think there has to be a strong focus on the investments, the business investment side, or we're just going to fall further behind the U.S., I fear.
Peter, long-term outlook?
Oh, it's great. I think it's great. No, I think it's important to just remember that, fundamentally we're humans and we've got a desire to thrive. We're in a fantastic country. We're going to have changes of political stripe. We're going to have, stuff going on with the U.S. and the borders, and we're going to have some other issues ahead that we don't, whatever, but we always seem to thrive. We're in a fantastic province. We're in a fantastic part of the world. There continues to be an amazing amount of productive capacity here. I think we're all set up for growth, for sure.
Fantastic. Do we have time still, Jessica? Great. So we're going to open some question, maybe 5-7 minutes question. There are 2 mics. The one on that side where Eric is standing, where Drew is standing. If anybody has any question, please just walk to the mic and ask your question. Any questions? No questions?
Oh, come on, you guys, I know you have more questions than that.
Peggy, stand up. You see Eric? Run, Peggy, come on.
I don't really have a question. I just needed steps.
Speak up, speak up.
Oh, my question is this. So Christopher alluded to 21-22 being an illusion and something that's never repeatable. When shit got real yesterday and the markets opened, the bond market was falling. There were like major institutions calling for emergency rate cuts. My question to you, is 21-22 really out there?
Real estate's cyclical, right? So I just think, you asked me about going across the country, and even BC, that's had similar market conditions to Ontario, didn't have the same 25-year run of up and up and up. And that has conditioned the average realtor in this province to expect that as normal. And I will say, province by province, it is not normal. People understand that there are peaks and valleys. It's usually every 4 to 5 years. And that's the mindset they go into their business with every single day. And I just think it's better to focus on what's in front of us. There are a lot of people that are going to need our help this year. Like I mentioned before, we're not a commodity. It's shelter. Life happens. People need to move for a variety of reasons. And those are the people that we really need to focus on. And yes, there'll be times where it'll be easier to get a deal done because there's way less supply than there is demand. But I don't think that we should get our hopes up for that anytime soon.
So Sal, you alluded maybe back to your question, Peggy, you alluded if the tariff challenge continue, we may see massive drop in the rate because the government is going to stimulate the economy by dropping the rate. So could we go back, as Peggy's question, to
That's really my
2021 to 1.8% fixed 5 years mortgage?
It almost happened yesterday.
If it's happened, these people will be very happy.
Very happy.
You're hoping for a trade war? The problem with that is that the unemployment rate in Ontario would probably go up to about 9%, and in Toronto, close to 10%, because the province would most likely go into a modest recession, according to work done by the Bank of Canada, according to our estimates, and other work done. So it would not be good for the housing market. Whatever recovery we were looking for this year would be on hold, and we probably would see prices fall a bit further. Under that kind of situation, no one would want to move up and buy a bigger house or buy their first house if they fear losing their jobs, regardless of how low mortgage rates go. Eventually, yes, we'd see a recovery, but not for the next year. Only after the tariffs were revoked and our economy could start growing again. So, no, I mean, we would see, as I mentioned, the Bank of Canada, we estimate, would have cut interest rates an additional 1 percentage point under those 25% tariffs, on top of the 0.5 percentage point we already anticipate for this year. So we would have seen policy rates down to 1.5%, and then variable mortgage rates would come down from current levels quite considerably as well. Fixed rates would also come down in a recession because inflation would ultimately be a bit of a spike up in response to the tariffs, but it would be very short-lived. Inflation would come down well below the 2% target.
And
so even longer-term fixed mortgage rates would come down, and that would eventually support a recovery in the housing market, but only after we saw further pain this year.
yeah, low interest rates weren't the only thing driving 2021. Right? The country was flush with cash. You had people making COVID crazy decisions. I'm going to move to the farm in the middle of nowhere, despite my job being in the city. It wasn't the only factor.
Can I ask one more question? What do tariffs look like? Like, do we get them on Tuesday and the unemployment rate goes to 9% on Wednesday? Like, how long do they take to work through the system?
For some industries, it would hit pretty quick.
Right.
The auto industry in particular. There's some analysts who work in the auto industry that said it essentially effectively closed down within weeks. All it takes is one part of a vehicle not to be there in time, and that production is disrupted. That car just sits in the plant. So some industries would be hit very quick. We estimate that the overall economy would probably contract for 2 to 3 quarters, almost immediately, before starting to recover. So it would be fairly, and the layoffs would come eventually, might be lagged a quarter or something, but by the second half of this year, yes, we would see Ontario's unemployment rate close to 9% by the end of this year, had the tariff started effectively today.
Thank you.
But keep in mind, we talked about it at the beginning, the tariff is just a strategy of Mr. Trump to negotiate. And as we all know, he goes on a podium and he lies and he keeps saying, yeah, I won. But he hasn't won anything. So we saw it yesterday. He sort of backed out and gave it 30 days grace, and he's renegotiating. So I really encourage you not to pay too much attention to the word tariff, but research and read about the 75% of the export that are happening from Canada to US. Majority of those auto industries companies or manufacturer or even energy, there are American investor companies within those companies. So it's those companies, the ownership or investor in US, they won't just allow this thing disrupt immediately. So
I think let me just make a point, because actually something occurred to me just during the questioner's question and the response, is that one of the problems that we sort of have right now, I don't know if it's a big problem, it's a perverse problem, is that we haven't experienced a structural recession in a long time. We've had recessions around the global financial crisis. We had one, we had the tech bubble in 2000. We have these minor recessions that have been sort of surgical, right? That have affected certain sectors and not affected income across the board or jobs for a large part. The type of recession that the bad tariff scenario, the full-on tariff scenario would bring, that would be like 1990 again. In fact, it might even be worse than 90 in the end in terms of the jobs and percentage. And 1990 was unequivocally the worst time for real estate. It was not the case that the interest rates going down rapidly somehow enlivened a whole bunch of, in fact, housing values went down for 9 years, and we didn't really start to get a pickup in transaction volumes either until late in the 90s as well. So I don't know. I mean, careful what you wish for, I guess, on interest rates. It's not the only factor.
Yeah. Question, Drew? Maybe two more questions, but we got to wrap it up, and then we come back to one to there.
So I'm hoping you can shed some light on these 2 questions real quick. So the first thing I was wondering is, what are your thoughts on, and this is more real estate specific, I guess, is what would need to happen, do you think, for foreign buyers to be able to come back into the marketplace? Like, what would be some key indicators that we might see that would open that up again?
Well, it's such a politically motivated policy, and we'd probably need some desperation and encouragement to use it as a stimulating factor. The challenge is it's such a small piece of the puzzle, even when we had no ban. And I think to rely on that or hope for that is it's not going to deliver enough to make the overall picture greater.
And the follow-up question then is also probably political. So what do you think, I know like a lot of people that I speak to about investing for like their kids' future, like now is a great time to get into something that's going to grow over 10 years. Yeah, it's going to be bumpy right now, but a lot of my clients, they have a lot of pushback as being landlords. And I was just wondering if you could speak towards Ontario kind of loosening up like other provinces. Like this is one of the hardest places for investors to have tenants and tenant rights, and how long it is to keep them out of to get them out of a place and pay your mortgage, and now you're in a huge deficit. So I'm just wondering what you think could happen on that.
And we need more policy change. Ontario is not a landlord-friendly province overall. Doug Ford seems to be paying attention to it. I mean, there's 2 sides of the coin, right? Like there's the rent eviction scenario and the big bad landlord that jacks up rates every year and kicks out families that can't afford the new rates. But there's also people that have made businesses out of taking advantage of landlords. Cash for keys, that's a popular buzz term. And I think I would be encouraging and have been encouraging the provinces to look at the landlord-tenant board and making some policy change there.
Peter, Altus did some research about the...
Yeah, I mean, I'm not sure if I can speak to the policy piece. I mean, whether if we change political stripes sometime in the next 10 years or whatever, whether that's going to make a difference. I'm not really sure if it would. It would really be good if the landlord-tenant board was properly financed so that it could actually just get through. I think it's more just, I think that's more of a matter than the policy. But what I will say is that, you know, Ontario and the GTA in particular continues to be an area where the balance of rental supply is most strongly skewed towards small investors. And this has been an environment where that's been the case. So when we look at rent, you know, over the last 15 years or so, we have seen rental demand slowly rise. Purpose-built rental new supply has been, you know, ramping up in order to try to match that. And we have some places, Montreal and elsewhere, where purpose-built rental is satisfying a large component of that supply, 60, 70, 80%, of that demand. But in Toronto, we're still, you know, sitting at only about 20%, 20 to 25% of the rental demand is being hit by purpose-built or institutional owners. And it's still small owners. It's still, a lot of it's coming through the condo sector, where fairly small investors are providing the rental supply, and through the single-family housing. I mean, that's been the biggest piece of growth in the last 7 or 8 years has been the fairly small, not institutional, fairly small investors who are renting out single-family housing. That's been the big section. So I don't know. This seems to be an environment where small investors are thriving for rental. You might not think you're thriving if you are a small investor, but in comparison to other parts of the country, it's an area where that's happening at least quite a lot.
Unfortunately, I have to stop it because I'm getting cues from front, back, and everybody just... Steve,
Thank you.
Shut up and move on. But thank you, Sal. Thank you, Peter.
Thank you.
I like also I'm sure you probably got the email or the memo. So our amazing Christopher Alexander has decided to pursue a different path for his career. On behalf of the RE/MAX Hallmark leadership, for the last 10 years, I had a pleasure of working with Christopher.
It's all roses and sunshine.
Yeah, every Friday we have this thing among ourselves. Every Friday, me and Christopher got to the heated argument, but Monday morning we were a friend. Thank you for your leadership during the COVID. Thank you for your leadership. Last year was a tough market, and we wish you continued success in your future endeavor. And thank you, everyone.
Thank you.